Hello everyone, I want to talk today about index funds. Index funds is something that has been mentioned a lot of times in the news, and maybe some of you out there don't know exactly what it is and you are afraid to asking or you want to know more information about it. So I will share the most important things about index funds. So first of all, what is an index fund? An index fund is just the same thing as you have, for example, the stock market in the US, an S&P 500 or the New York Stock Exchange, or the European Stock Exchange, let's say the Euronext 50 or the FTSE 100, which is the London Stock Exchange, 100 biggest companies in London. The Euronext 50 are the 50 biggest companies in Europe. And what they do is the index funds is that they track what happens with those companies. So let's say, for example, an S&P 500, which is the 500 biggest companies in the US stock market, then when they as a broader index go up, then your value goes up if you have invested in it, and if they go down, then you go down as well. Another very popular one is, for example, the Nasdaq, which is the tech stocks in the US, and what happens there is, let's say the tech stocks go up in general, maybe most of them, let's say 80% went up with 2%, and 20% went down with 1%, then they just look at the value of each company and how much of each one, the weighted factors, into the index, and then your index level goes up or down based on that. So it's a very general way of spreading your risk because you're not investing into one company. So in an index fund, you're clearly investing in all the companies in the index, and the index is automatically also refreshed, which means that if a company is not one of the bigger companies anymore, let's say, for example, Yahoo, they used to be 15 years ago, they were in the S&P 500, but now they're not there anymore for a while because they're not one of the biggest companies anymore. But at that time, they were a big company, and they keep refreshing automatically also with newcomers. So for example, Facebook didn't used to be part of the S&P 500 or the Nasdaq or any other major index because they were not part of the stock market. They did an IPO, and because of the IPO, they became public traded company, and since then you can automatically buy shares from them if you are invested in an index which has them in it. Now, index funds are also very popular because they're very low in charges, because it's not actively managed, it's passively managed, which means that automatically things happen. You don't have to actively pick which fund is in it. No, this is done automatically refreshed. So charges seem to be or are much lower than, for example, a mutual fund or a hedge fund. They have the lowest charges for a fund in the market. So that's also why they're very popular. And also index funds tend to outperform other funds, especially over a period of longer time. You see that the longer you invested, the more likely you are that you will get better returns than other funds. So this was the most important things about index funds. I thought that you might like to know more about this. So if you want to know maybe some other things, please comment on the below section, and I wish you a nice day. Goodbye.